Well, good afternoon, everyone. Very important day in markets. The financial journalists are referring to this Fed meeting as the most important one in many years. All of the big banks, save one, are forecasting an interest rate hike in the US of 0.75%. One bank, Nomura, reckons it's going to be 1%. And certainly, I think that at 0.75%, most of that is factored into the market. A 1% hike would certainly not be factored into the market. And then, of course, we've got the rhetoric in the talk at, I believe, starts at 2:30 Eastern Time. That's 7:30 in the UK. So the press conference. So I think that if there's even a hint of a slowdown in interest rates, that will cause this market to move up. So let's have a look at the situation. That's the VectorVest comp, folks, over the last, 6 months. And all of the measures of the trend on VectorVest are down, from short term to the longest term measure of the trend. I've spoken about those many times. The market would seem to have fallen here in 5 waves. And as you can see, the MTI and the buy-sell ratio are not quite at mega oversold levels, but they're nearly there. And there's a bit of divergence here, where this is falling a little bit, this is flat, always a preemptor of a turn. So the trends are all down. The only reality is the trend. I certainly won't be doing anything, maybe an intraday play, but nothing more than that. So it's sudden death tonight, and clearly the journalists have got it right for once in calling it a very important Fed meeting. Bank of England is up tomorrow, but nevertheless our markets here in the UK will be driven by whatever the Fed does tonight. Clearly, a 1% hike plus hawkish talk will cause this market to fall, and fall very hard indeed. So I'm going to look now. The S&P this afternoon is up a few ticks, and if we go to it's up 31 ticks on the afternoon. And I think I've got the intraday chart running here in the background. There we are. It's up quite nicely. It's just a raw chart. A 21 period moving average, and that's a 5-minute chart, folks. The moving averages of the floor session, that was my trade yesterday. Should have been in earlier at the upthrust, but was sleeping, and that was 20 points. That was very nice indeed, down into that low. I actually took it off at 20 points. If we now look at the overnight market, here we've got the overnight market, and that's the CPI number that we all remember. The market's been quite kind to me this month so far. I've only traded 3 times, and I've won 3 times, and that's not because of anything clever that I've been doing, but because the market's been trending. I think I put a video up about there was a nice 40 points here, and I didn't trade in here. I wasn't feeling that well last week, but I managed to get that on Tuesday. After the funeral, I think that was on Tuesday, and there was 20 points there. And that's that trade that I took at about midday Eastern Time yesterday. So I'm up, 40 and 20, 80 S&P points for the month, another 120 to go between now and the end of the month. You don't have to trade that aggressively, folks, to make that sort of target. Once you're consistently making a few hundred S&P points a month, then to make as much money as you want, all you've got to do is just increase the bet size. And that's what I've been doing. I cut the bet size right down to where I was 15, 20 years ago, after I came out of hospital in July, and slowly but surely building it up again. This pattern that we have here is a bearish pattern. We've got a leg down, like so, and then a three-wave structure up. And that's a pattern that was put down on paper by a gentleman called Harold McKinley Gartley. Way back in the 1930s, he wrote a wonderful book, How to Make Money in Stocks, or Commodities, I think. And that's one of his patterns. The pattern was taught to me by Larry Pacevatis. If you have to look at this, you'll see that this market is finding resistance at that 62% retracement. Whether the 62 is sent down by God or whether it's self-fulfilling, I don't know. And I don't much care, to tell you the truth. I would be waiting, and it's a really difficult day to be taking positions, because one word from Mr. Powell can kick your prognosis into touch. But my system will be looking for a short somewhere up around this area. Clearly, if I'm wrong, I'll just lose a little bit. The method that I use for trading the S&P 500 works exceptionally well when it's in sync with a longer term trend. And when the longer term trend changes, I invariably am shorting a high, and the trend has changed and it just keeps on going. And so I lose a little bit at the turn. That's just the way it is. So an exciting evening. And I'm looking forward to it. Let's see what happens a little bit later on. An awful lot of words, but nothing really concluded. Let's wait on Mr. Powell. Let's see what he has to say. Thanks very much.